Hi everyone, it's me, Corrie Sommers, your local Los Angeles Realtor. Today we're going to be discussing options for financing for those buyers that have been waiting because of the rise in interest rates, which by the way peaked last November. So I want you to stay tuned. We're going to jump into some options that are available for you today to help you out with a little bit of higher interest rates. If you haven't subscribed to my YouTube channel, please take the next couple moments to click the subscribe button and that bell for updates, and I'll be right back. Hi again, it's me, Corrie Sommers, your local Los Angeles Realtor. Have you been taking a pause on buying your new home in the last year because interest rates were really going up pretty aggressively last year in response to the way the Fed was raising their rates to try to slow inflation? Now, some people aren't really realizing that the interest rates actually peaked in November of 2022. That's right. They peaked in November of 2022. And since then, they have been coming down. Now, they're not coming down aggressively the same way they went up, but they are starting to come down. Will we see the 2s and 3s again? Highly doubtful. But we will see them level down. And if you purchased a home at 7.5, or in the 6s, over the next year or two, you should be able to get into a sweet spot at a lower rate and refinance. But for now, what do you do when you need to buy a home and interest rates are just making it very difficult? Well, I have some information that we're going to take a look at with Origin Point lender Marc Chamberlain. So without further ado, let me jump in so he can explain their buy down programs to you.
So Corrie, let me go through this 2-1 buy down programs with you so you have an understanding of how this works. So essentially, these buy down programs, they're just temporary buy down programs that will provide the buyer a lower rate for year 1 and year 2. And the total amount of the subsidy that would need to be provided would need to be negotiated between you and the listing agent in the form of a subsidy credit from the seller. Does that make sense?
Absolutely.
So there's 3 different types of buy down programs. There's the 2-1 buy down, there's the 1-0 buy down, 1.5 to 0.5 buy down. In the 2-1 buy down, the rate in the first year is 5.25. It's 2% lower than the normal start rate. And then in year 2, it would be 6.25. This amount here shown in the subsidy box is how much the seller would need to contribute for the buyer to take advantage of this 2-1 buy down. And how this is calculated, this total amount, it's just the monthly payment difference times 12 for year 1, and then in year 2, the monthly payment difference from the normal monthly payment at 7.25 times 12. You add these two together, and then that's the amount of the subsidy.
Now, so let me ask you a quick question. I don't mean to interrupt, but I'm just thinking of like a client of mine per se who isn't quite at the $1 million threshold. And so we're limited into which part of Los Angeles we're looking for a home, but they really want a home with a yard. And so because the interest rates are significantly higher than what they used to be, this is a way for them for at least 2 years to pay less than what their actual interest rate is, because the seller's ultimately kind of covering the difference, so to speak, correct?
Correct. Absolutely correct. And the amount of the money for the total subsidy gets held into, it's very similar to an escrow impound account. The loan servicer is holding it. And then as the monthly payments are made, the monthly payment difference will be pulled from the subsidy account at the loan servicing department. And then when rates do drop, if they refinance within the first 2 years, which there's a very high chance that will happen, whatever amount of money is left in the subsidy account will be applied as a principal reduction to the buyer, so they never lose the money.
That's wonderful. And I know that we've talked outside of this particular video that we're doing right this moment, that there seems to be some prediction that interest rates at some point within 1 to 2 years will come back down. What kind of rate projections are you seeing?
As far as the prediction of the rate, that's very hard. No one's really given us a rate prediction as to what it will be, but we just do know that it eventually will come down because what's happening in the market right now, rates are going up because inflation has gone up. Inflation is at record highs. And right now, with the Fed raising the rate with all the news of this, the Fed's job is try to get inflation under control. And that's the reason why they keep raising the federal funds rate. And as inflation comes down, so do mortgage rates, because the arch enemy of fixed mortgage rates is inflation. It's not the Fed raising the rate, it's inflation.
Yeah. Great explanation. I appreciate that.
So also, in negotiating with the listing agent or for your buyer on this program, you can see, for example, the second most beneficial program for the buyer in this example would be the 1.5 to 0.5, which just essentially means in year number one, the rate is 1.5% lower. And then in year two, it's going to be 0.5% lower. The amount of the subsidy is lower. So in case the seller doesn't want to contribute that much, there's other options here where they can contribute. And these subsidy amounts, these credits, are no different than normal seller credit. So we still, most agents will always ask me, what is the max amount that we can actually credit on a deal? And if your client is putting down about 10% on a condo, you're not going to have any issues with the max seller credit amount, because it's typically around 6% of the loan amount. It's not 6% of the purchase price. It's always based upon the loan amount.
Okay. And that was actually going to be a question I was going to ask you. I would assume that before we can determine for the buyer what type of buy down we're asking, we would need to check with you, the lender, to see what the potential max credits are available based on what they're putting down in their loan amount, correct?
Absolutely. And also on that note, not all lenders and not all banks will offer this program. So it's also very important to ask the buyer, does your lender, does your bank offer the 2-1 buy down, the buy down option program? Because if they do not, they cannot take advantage of this program. And then also it's very important to, the buyer should know this can only be done on a conventional loan, an FHA loan, or a VA loan. It cannot be done on a jumbo loan, and it can only be done on a 30-year fixed mortgage.
Okay. Very good. Very good information.
Now, if you do have a client that is potentially looking at a jumbo loan, there are other options for a jumbo loan buyer, but that falls more so on the very it just falls back to the seller credits. How much seller credit can you get for your buyer in that example? And then each jumbo loan is very specific to their guidelines of that investor. So if you, in essence, if you do have a jumbo loan client, then it's just, you just want to make sure, check with the bank or the lender, what is the maximum amount that the seller can contribute. And then it's just going to be applied as a normal toward the seller credit to offset the closing costs.
Okay. That's wonderful. Marc, I really appreciate you taking the time with me to break down this program to really help buyers out there navigate these higher interest rates and what the options are. I think this is extremely helpful. Thank you very much.
Yeah, of course. Thank you for having me, Corrie.
Hi again, it's me, Corrie Sommers, your local Los Angeles realtor. Have you been taking a pause on buying your new home in the last year because interest rates were really going up pretty aggressively last year in response to the way the Fed was raising their rates to try to slow inflation? Now, some people aren't really realizing that the interest rates actually peaked in November of 2022. That's right. They peaked in November of 2022. And since then, they have been coming down. Now, they're not coming down aggressively the same way they went up, but they are starting to come down. Will we see the 2s and 3s again? Highly doubtful. But we will see them level down. And if you purchased a home at 7.5, or in the 6s over the next year or two, you should be able to get into a sweet spot at a lower rate and refinance. But for now, what do you do when you need to buy a home and interest rates are just making it very difficult? Well, I have some information that we're going to take a look at with Origin Point lender Marc Chamberlain. So without further ado, let me jump in so he can explain their buy down programs to you. So what did you guys think? Is this something that could work for you? Could you see yourself doing this? And obviously you really need to work with your real estate agent as well, because you do need to get the cooperation from the seller, but this is definitely an option to help you get into a home if you feel the interest rates are just making homeownership just a little bit out of your range right now. Again, we are going to see interest rates come down, but I don't have a crystal ball. I can't tell you exactly when, but all the lenders that I speak with definitely believe we're going to see that happen over the next 2 years. So don't wait. Don't miss out on the home that you need. There's options out there. Origin Point is not the only one that has these programs out, and more lenders are coming with other ways and other programs to help you get into home ownership. Thanks so much for watching, you guys. If you haven't subscribed to my YouTube channel, again, take a moment to click the subscribe button below, bell for updates. I have so much more videos in store for you. Thanks so much for watching. Talk with you soon.